So as always, you can get my free training or join our live training room underneath, or both. So RBA last night, okay, UK time last night, you had your conference, you had monetary decision, cash rate. You can see there was various things that came out with this. The RBA cash rate 4.35 versus 4.35, unchanged, stayed the same. Much of the same rhetoric, like I said, as the Fed, places like that. They're all following suit because they don't want to make a mistake, I think. They just say they want to bring inflation back. They're waiting for more data, more evidence of it. It's all very boring and very sideways. And that really is why this happened. Okay. There's nothing that changes the mind of all dollar traders here. There's still strength for the US dollar, hence why you're pulling down straight away. Again, much like I said on oil a minute ago, if you're watching that, okay, there's real weakness here because you're immediately dropping with a harsh red candle. If that continues, it would not surprise me. And thus, I've been very careful with oil dollar. You've got to be comfortable with taking a bit of risk. And the reason why is because you're getting long within this. It's fine to buy downtrends. I say that all the time. Okay. But you're trading against sentiment and against direction, and you've had many occasions where you've fallen, and then you've had to pick somewhere to get long before you fly up. Now you can take what you've seen already with a pinch of salt, because you've gone up from this level and you didn't quite get there again. Okay. Now, if you go to your monthly, for example, it looks fairly ugly from a tech perspective. Because what's happening is, again, every push is getting weaker and weaker, and the ord's losing more and more value. And you really want to buy when you get these months of green. Okay. Now, I wouldn't be surprised whatsoever if you come down here ultimately and you get back in the territory of this, just from a technical perspective. That is going to be ideal for long entries, somewhere along the stretch of that wick. Okay. Just note, before you had it here, okay? All right, so you've seen this as a flip zone, or at least a recurring support zone. Clearly, it's a very reactive area. So that is how you form your probability bias, if you like, for your next entry. It's going to be based on what you've seen. That's all you can really do, okay? And I should think once the oil gets so low in value, they're not going to want it there anymore, and it will come up like it did for a significant period of time every time. Okay, so let's think about that for a second. When it came up from here, for example, I know it was a while ago, but it doesn't really matter. July 86, all the way up to Feb 89. Okay, almost 3 years. Then you had 2008 November to 2011, almost November again, so almost 3 years. And then you had April 20, took you all the way up to Feb 21. Okay, so a bit shorter, nonetheless up. Okay, so this stretch at this point has had 3 years twice almost, and a year here. And at the absolute pits, if you get down there, you spent, it didn't actually go under this previous low, so technically it went up for the whole time, from 2001 to 2011. But even if you took it where it first falls, it's 7 years of up move. And the reason why it goes up for 7 years is because it's come down for such a long period of time. Now, similarly, you've done the same thing. You've come down since 2011. This has been falling for 13 years. So your job really, especially as an investor taking it long, is to really spread those entries out and plan effectively for a long-term bias to the upside. And that would come around a swap in monetary policy and a reason to invest in the oil dollar. If they're all following the same idea of tightening or easing, then you may find, especially easing, you may find that it's just purely based on the growth of that economy or the economic situation at the time. But ultimately, you can see things always change to the upside. It's just the case that with ORD, like I said, every push is so weak. It's not attractive. It doesn't scream to me saying, wow, this is fantastic for longs. And it's just because you're coming straight back to these areas of support just so frequently. Okay, and it's crumbling and crumbling and crumbling. So in short, really, I guess, if you're going to be buying this, if you're going to do it there, I would do it very lightly. I'd be very careful. It's not the same as the euro dollar, for example. This is much more steep than pound, than euro, things like that. So you can compare those accordingly. And if you're going to buy again, really space it out. And I mean really space it out, because you could keep drifting and drifting and drifting. Of course, you need risk plans with all of this. And the problem with stop losses for people, why I don't use them, is because you have to pick an area, essentially. And often people find that quite difficult, because that candle wick stretches all the way along there. So you'd have to drop something like your weekly and take various entries all the way down to get the probability on your side. So you could even not buy there at all and just wait until you get something like 0.58. I mentioned that as an area a very long time ago. Okay, or maybe slightly higher, just in line with this previous low. Okay, because you didn't quite get there before. But you can see what's happening. You're just trickling and trickling and trickling down and 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 down. Okay,